always reach us and follow up on our conversations every single moment of the day on social media. You'd find that handle scrolling on your screen. Welcome again to Market Insight. By the way, here we take a look at the markets, help you break it down in its finest granularity to help you understand what is really going on and, of course, how it does affect your business, how it does affect your pocket. My name is David Chiedu, and we're doing this one today. Today we're talking about what happened on Tuesday at the MPC, where the CBN raised interest rates again for the fifth time in a row, in the last couple of months in the year 2024. We're going to delve into the conversation, and talk about it in copious detail, understanding all of it and what it does mean for us on a day-to-day basis and in terms of Naira and Kobo. We'll do that very shortly. But first of all, let's take a look at what is happening, or rather what has happened so far during the course of the week from Monday till yesterday on the trading floor of the Nigerian Exchange Group. Now, at the end of yesterday's trading session on the Nigerian Stock Exchange, a total of 344,355,846 shares in 9,005 deals, corresponding to a market value of 6,609,136,259 Naira 8 Kobo were traded, compared with the previous NGX trading day, that was Wednesday, September 25th. Thursday's data showed a 43% decline in volume, a 47% decline in turnover, and a 7% decline in deals. Now, the current market capitalization of the Nigerian Stock Exchange is sitting at 56.6 trillion Naira. In the aggregate, 120 NGX listed equities participated in trading, ending with 28 gainers and 27 losers. FTN Cocoa Processors led the gainers with 9.82% share price appreciation, closing at 1 Naira 79 Kobo per share, followed by Elijah Lakes going up plus 9.8%, Deep Capital Management and Trust going up plus 9.78%, and Regency Alliance Insurance going up 8.62%. On the losing side, we saw Caverton Offshore Support Group coming out last with an end-of-day price depreciation of 9.73% at 2 Naira 97 Kobo per share, followed by Cadbury Nigeria going down minus 9.39%, Associated Boss Company going a negative 8.73%, and Mac Nichols going down 7.89%. United Bank for Africa recorded the highest volume of 29.2 million traded shares, followed by Access Holdings at 27 million, Honeywell Flour Mill at 25.5 million, and Sterling Bank PLC at 25.3 million. Now, regarding the performance of the NGX market indices, the benchmark NGX All-Share Index shared 463.86 points to close at 98,523.56, representing a one-week gain of 0.53%, a four-week gain of 2.41%, and an overall year-to-date gain of 31.6%. Other remarkable indices that performed were the NGX Top 30 Index, including the Insurance Index, Consumer Goods Index, Industrial Index, Oil and Gas Index, and the Main Board Index. Well, that's what it looked like on the floor of the NGX trading floor during the course of the week. We'll take a short break. When we return, get straight into the conversation off the back of the MPC interest rate hike. Stay with us. Welcome back to Market Insight this beautiful Friday morning. Now, as I mentioned, we are talking about the CBN's Monetary Policy Committee interest rate hike happened on Tuesday. We're talking about the overview, or we're taking a look rather at it, doing an overview, and of course, talking about the implications across the different sectors of the economy and how it does affect you and I, really, in the actual sense of it all. Now, in a move that stunned the financial markets, the CBN Monetary Policy Committee voted to further raise interest rates by 50 basis points to 27.25% from 26.25%. The Apex Bank further increased the cash reserve ratio of commercial banks by 500 basis points from 45% to 50%, while that of merchant banks were increased by 200 basis points to 16%. Furthermore, the MPC raised the asymmetric corridor around the MPR to plus 500 and minus 100 basis points, while the liquidity ratio was retained at 30%. Now, the governor of the Central Bank of Nigeria, Olayemi Cardoso, noted that the decision to further tighten said monetary policy was a unanimous one by the members of the MPC. Now, this decision to raise interest rates was premised on recent events in the economy regarding inflation and the stability of the foreign exchange market. He also mentioned that the threats of inflation, flooding in many parts of the country, rising energy costs, and all of that, led to the further tightening of the monetary policy, as he were, and he saw the need, or they saw the need for this particular implementation to be executed, as he were, or this particular action, beg your pardon, to be executed. And now, considering where we are in the last 6 or thereabout months with lowering inflation rate, talking about headline inflation, more questions have arisen as to where this leaves us. We'll examine this and more on the program this morning on Market Insight. We're being joined by an associate professor of economics at the University of Lagos. He is also a sustainable development economist and a macroeconomist. We're talking about Dr. David Martin Oke. He joins us on the program live in the studio this morning. Dr. Oke, thank you for joining us.
Thank you very much for inviting me.
And now we're going to start off fundamentally with a very, very basic aspect of this conversation. We've seen the numbers. We know what the MPC did on Tuesday, but we need to get a sense of what it does mean for. Let's make heads and tails of it. You are an expert in that regard. So can you give us some more insight with regards to the numbers? Help us make some sense of it.
Okay, thank you very much. Monetary policy rate, is the rate at which the central bank discounts the first class bill. In essence, the central bank has these instruments to use depending on the ups and downs in the economy. So if the central bank sees that, for instance, there's a macroeconomic problem, for instance, you have unemployment rising, you have poverty level, increasing, you have inflation rising and all of that. So the central bank can decide to increase the monetary policy rate. Of course, there are major goals of the central bank. The central bank has the major goal of fighting, or let me say, combating inflation. Of course, the central bank can also ensure that the economy continues to grow such that the employment rate, keeps rising, or get to the point that we can say is fully employed. But we don't have that case in Nigeria, so you know that unemployment has been rising. But the basic goal of the central bank is to ensure that inflation is low. And if you check the last Monetary Policy Committee decision, you discover that they actually heightened the monetary policy rate. And they saw that the headline inflation reduced to 32, around 32.15% in the second quarter. So they felt that, yeah, the policy worked, and they felt, given the situation in the economy, the best thing to do, of course, all the members of the Monetary Policy Committee, you know, agreed that the monetary policy rate should increase. So that's the background. Now, we then look at what does that mean to us.
Before we get there,
Okay.
Doctor, I'm also curious as to, and I want to know exactly what you think. This idea of maintaining a stronger stance, if you like, or a tightening stance, dates back to the last administration of the CBN 2 years ago, when they started their hawkish trajectory, if you like, from May 2002. And they've continued on that particular trajectory at this point in time. So a lot of, experts in that field expected them to take a more dovish stance, per se, or take the dovish route, considering, the fact that over the last 2 months or thereabouts, we've seen headline inflation and food inflation falling, leaving out core inflation, by the way. And of course, also off the back of what happened last week with the US Fed rate cut, we saw they took a more dovish stance, reducing interest rate. But now we're seeing the Central Bank of Nigeria going the converse routes, going hawkish as opposed to dovish. What do you make of this? Do you think, they're on the right trajectory?
Yeah, I think the central bank is on the right trajectory. And the reason being that, inflation is not healthy for growth. Constant increase in the inflation rate makes people poor. Nigeria today, people are suffering. Everything is difficult. So, and if the inflation continues to rise, that is not healthy for the economy. In fact, research has shown that for a developing world, the inflation rate that's healthy is around 7% to 13%. Some research, stipulates or suggests 9%. So if you look at our inflation rate at about 32.5, I mean the headline inflation rate, 32.15, you see that that's a very high rate. So the central bank has the option whether they should maintain the monetary policy rate at the rate it was last 2 months or to increase it. But the fact that they saw that the inflation dropped, and they feel that, like I said, the major goal of the central bank is to ensure low inflation. Because in macroeconomic objectives, you tend to trade between low inflation and a high growth. And if you check the growth trajectory of the economy of Nigeria, the first quarter, we grew more than 2%. The second quarter, we grew more than 3%. The global growth rate suggested for 2024 is 3.1%. So it means that Nigeria is not actually doing bad when it comes to growth. So it means that, okay, at the fact that growth also, the high inflation rate, is also not good for growth and for welfareism. So it then means that it makes sense for the central bank to heighten the monetary policy rate. Now, when the central bank, can I continue?
Yes, please.
Okay, when the central bank heightens the monetary policy rate, in essence, we say the central bank, contracts the economy. So, and that has a number of transitions to the economy. So the first transition we see is in terms of the interest rate challenge to the economy. So it means that the interest rate now has increased. And then it means that people, they were probably consuming certain capital goods, maybe buying houses or some other capital goods. What it means is that they will not be able to take, because the lending rate will be so high. And so maybe around 30-something% and all of that. So it may not be healthy for them to actually borrow. In essence, borrowing is expensive. So they will say that, probably I will reduce that consumption. So, and then the firm would not want to go to the deposit money banks to borrow because it's expensive. So in that way, investments will fall. And so when investment falls, the aggregate demand, in the aggregate demand, we have the consumption component, we have the investment component. and we have the government expenditure components, the state, local government, and federal government. And then we also have the net export, the export and the import. So, and investment is one of the volatile variables in that aggregation. So it means that the aggregate expenditure in the economy, if you sum it up, that is this, if you sum all the expenditures, the aggregate expenditure will fall. And, so there is this relationship between expenditure and inflation. So when the aggregate expenditure falls, it means that economic activity is expected to fall. It means that we're going to lose certain level of growth, so to speak. But at the same time, it means that we are going to see a scenario where the inflation comes down.
And this will happen over time.
Yeah.
But
that's one channel. There are several of them.
Okay, we're going to get into those. It gets even better. Now, I'm wondering about the timing, because over the last 24 to 48 hours, I've heard a few, experts, both on the local and international scene. One of them is the chief of the African, I can't remember her portfolio right now, but I think it's the African chief or something of Standard Chartered. She said something along the lines of whether or not the CBN is in order as far as the timing is concerned. And I'm inclined to, asking questions based off of, her concerns, as it were. So is the timing at this point in time in order? Because when you view it, broadly, it looks like a piecemeal approach or a fragmented approach when you compare all the variables at play. Now, on the surface, it looks good, or it could be perceived to look good. But, overarchingly, can we actually say that it has been effective? Can we actually say that, it will be sufficient at this point in time?
Yeah, okay. Just like I said, the timing, whether we should increase the monetary policy rate or we should reduce it. So like I said, it makes economic sense to increase the monetary policy rate, even at this time. Now, the reason why people say, why don't we go for expansionary? But if we go for expansionary, so from economic trajectory, the links and its channels, inflation will increase. And when inflation increases, it means that your purchasing power will drop. And if your salary has not increased and everything is hiking, prices are going up, it means you are becoming poorer. So it does make sense that you contract the economy. Now, some other people have suggested that why can't the fiscal sector encourage, the agricultural sector, for instance, through the Bank of Industry and other means to ensure that the industries are able to access credits and all of that, and so that we can continue to increase production and all of that. But that will become a kind of a conflicting policy,
How so?
in the sense that, theories have shown, of course, it's also in practice, that if the central bank that regulates the monetary sector pursues a contraction of monetary policy, it's expected as part of policy congruence that the fiscal sector also pursue a contractionary policy. Now, if the fiscal sector does otherwise, if they do otherwise, rather, so what happens is that, of course, this to say that, we do not want this trade-off. In essence, we want the central bank pursue inflation, ensure that inflation drops. The fiscal sector pursue growth so that we can see growth, right? But, like I said, again, that can also result to more money entering the economy. And in the process, what you want to see, the level of drop that you may likely want to see in inflation, you won't have it. So for you to have it, it makes sense that they have to agree on the same policy trajectory. So then what should the government do then? In essence, it makes that the government, for instance, should ensure, because if you check the inflation rate, for instance, discover that the food index comprises the larger components of the inflation rate. So it makes that the government must ensure that there's security in those areas, in Benue, in all parts of the country, so that, production of, food items, can continue. In essence, it doesn't cost the president to be having meetings upon meetings, briefs with the security chiefs, ensuring, that makes they are not spending any money. That's to ensure that the security chiefs, they do their work. And if we do that, we'll be able to see that the production will continue to increase. If you check the last growth in the second quarter, you see that 20% of the growth came from crop production. It means that there are opportunities in crop production in Nigeria up to today. You also see that about 20% of that growth also came from trade. It also means that people can still continue to trade and buy and sell. The economy is good for it. And you also see in the area of information, so people can continue to invest, in the telecoms and the information services and other parts of the economy. So in my mind, I think whether it is right time, I think it is.
All right, Doctor, I'm going to take you up further on this, aspect, talking about on this portion of the conversation, talking about the fiscal side, because, a few arguments recently have been made in that regard. But that would not be before we take a look at just a little excerpt from, the MPC meeting Tuesday, hear what the CBN governor himself had to say with regards to said proclamation. Of course, it's public knowledge right now, but let's just give you a sense of, how it all went down in a few seconds.
Decisions of the MPC. The committee was unanimous in its decision to further tighten policy and thus decided as follows. 1. Raise the MPR by 50 basis points to 27.25% from 26.75%. 2. Retain the asymmetric corridor around the MPR at plus 500 to minus 100 basis points. 3. Raise the cash reserve ratio of deposit money banks by 500 basis points to 50% from 45%, and merchant banks by 200 basis points to 16% from 14%. 4. Retain the liquidity ratio at 30%.
Now, that was the CBN governor, Olayemi Cardoso, making that announcement. We've been talking to Dr. David Martin Oke. He's an associate, professor of economics at the University of Lagos. Now, earlier, Doctor, you were talking about the fiscal side of things. Now, there's some arguments have said that, listen, the CBN are on a metric that has more or less little to do with the monetary side of things. That in fact it has a lot more to do with not significantly though, but considerably more to do with the fiscal side of things. Especially when you talk about mismanagement, and all of that. And then some others have said that the rising prices aren't particularly demand driven. In fact, that they're due to increased production costs that are tied to, rising energy costs as well as FX issues. What do you have to say regarding that? Is the CBN attacking the problem from a lopsided point of view? Earlier you talked about the government focusing more on the fiscal aspect. Do you think right now we're putting the cart before the horse?
Yeah. Okay. Thank you very much. Like I said earlier, the central bank has its goals, and largely to ensure that there's low inflation, what we call the price stability, to ensure that the economy continues to grow, to ensure that employment increases, to ensure that the exchange rate is stable. Now, for instance, when it comes to exchange rate, I was talking about the monetary policy rate hike. Several link. We have the exchange rate link or channel. We have the price, the asset price or the wealth channel. We also have the balance sheet channel, etc. But if you look at the exchange rate channel, what that channel says, if the central bank hikes the monetary policy rate, what happens is that the interest rate has gone up. If you compare that interest rate, or what we call it, can say the return of investment, because it has implication on return of investment. For instance, now we are saying that individuals can borrow. Individuals, can save, right? The borrowing is not good, right? But that individuals can save probably because you can get higher interest rate from your saving, but that's not really the case in Nigeria because the saving rate is low. Sorry, please. So what we're trying to say in essence is that the rate on investment in Nigeria compared to other places can be higher. So that can encourage inflow into the economy. Now, when that encourages inflow into the economy, what happens is that, the increase in that inflow will cause the exchange rate, to appreciate. Okay. Now, when the exchange rate appreciates, it means that the price of export is very expensive and the price of import is cheap. So it encourages us to import rather than to export. And in the process, the net export reduces, the aggregate expenditure reduces, and we have low inflation. So that is the exchange rate challenge. So if central bank doesn't pursue that, what it also means is that if central bank pursues expansionary monetary policy, it will depreciate further the exchange rate. So it means that the exchange rate will depreciate further. So it means that it doesn't make sense because the exchange rate, the price of naira compared to the dollar or the euro or the pound sterling is too high. So it means that for me, the central bank isn't the right trajectory. But there are other things that the central bank can do.
Like?
For instance, if you listen to the central bank governor, he said that they are going to pursue some untraditional, methods, but he didn't mention what exactly untraditional method. The method that's not traditional, unusual method that they're going to use. What I was thinking is whether he's saying or they mean that they are going to use quantitative tightening. For instance, where they're going to probably sell, government debt.
Okay.
So and then
debt or assets.
No, debt in this case.
Okay.
That has implication, of course, for their independence. Okay. Now, another thing
is that what you meant by quantitative tightening?
Yes, quantitative tightening. And again, the central bank itself, but if they pursue that will affect their independence because, they are more or less, relating with the fiscal, with the government in that process. And if the independence of the central bank is compromised, that means that it can also affect their potency or their activities in terms of reducing the inflation rate. So the central bank must ensure that they continue to remain independent. Now, the other thing that the central bank can do, if the central bank wants to continue to reduce inflation, is that the central bank can communicate to the public and say, in the next monetary policy meeting, we are still going to hike the interest rate. So if the central bank does that, it makes that the contracts, and other things that, people will do, they will factor in that into the model and ensure that they do not increase the wage or do not increase the contract at the end of the day. So, and at the end of that, so that means that the aggregate demand will also continue to come down. And then the central bank will be able to continue reduce the inflation further.
Now, we know that the CBN means well, because of course, at the base of all of it all, the idea behind this particular move is to drive inflation down. that has been, adequately established, over the last, couple of days, following this recent rate increase, as he were. However, other issues are, there are other attendant issues, and you've just spoken a little bit about the forex market. Now, immediately after that happened, just 2 days ago on Wednesday, we saw the Naira at the official market, by the way, going to an all-time high of 1,667 Naira. So I'm wondering, what does it translate to as far as the day-to-day trading in the local markets is concerned?
Yeah, like I said, if the Naira continues to depreciate, what it means is that, the value of the Naira will also be affected. There's relationship between the exchange rate and the inflation rate. So if the Naira depreciates, the inflation also has a way of increasing. But, like I said, for the central bank, to fight that, and one of the things to do is to ensure that there is contraction in monetary policy. So when the Naira continues to depreciate, theory says that, suggests that, people will want to export. If you are a productive organization and, you are producing, you have the export capacity and you export, so it makes that you'll be going to make more money because the Naira is depreciating. So if you sell, you're going to get foreign currency. If, for instance, if you sell to the United States, so you're going to get dollars and then you are richer. So that means they encourage export if the Naira continues to depreciate. But that works if the economy is a productive economy. In essence, there must be infrastructure. Just
which
like
we don't particularly have.
And you also see that our problem is largely not as a result of these policies, implementation and all of that. It's just that we have the problem, what we call the, institutional problem.
We have been talking about the fallout of the CBN's MPC meeting 2 days or 3 days ago, rather, that saw interest rates going up to 27.25%. And we've been talking about all of what it does mean for the Nigerian local economy. And Dr. Oke is in the studio with us. He's been talking us through all of these issues and then some. So, Doctor, you were talking to us about what the federal government can do besides the CBN with regards setting up, veritable institutions, as you were, that can help, for want of a better or the appropriate term, pad up sections of the economy, particularly in the physical aspect of things, that can help support the CBN's monetary policies, as you were. If you just kindly round up with that thought in just a few words.
Yeah, I was just trying to say that the government must ensure that the organizations that have been set up to ensure that corruption, goes down or is minimized to the barest level, must be seen to be independent and must conduct their activities in a way that ensure that corruption, is detected by everyone in the society. And so that has a way such that the little resources that the government has or the income that we earn, can actually trickle down to development projects, can actually be used for the purpose for which, they are meant to achieve.
Now, let's also talk about SMEs. We've talked about, what it means for trading and all of that. We even hinted about what it could mean for, certain sectors of the economy, production, manufacturing, and all of that. The SMEs are, for all intents and purposes, the driving force of most economies of the world, if not all. As far as we are concerned, we have the SMEs in the country accounting for 96% of its business activities and providing 80% employment opportunities, as well as contributing about 50% 5% to the country's GDP. Now, with this particular development, credit becomes, rather difficult to access because of the rates, as you were, and it's most likely going to discourage business growth and expansion. Where does this leave the average businessman? Where does this leave the average, worker who is gainfully employed, and all of that? It doesn't sound like good news for all intents and purposes. What do you reckon?
Yeah, it doesn't sound as a good news at all. But it makes that the SMEs should think inward, and say, should I need to diversify? For instance, I mentioned trade. If you can go into trade, maybe at the moment, I'm just suggesting, probably you can do that. But if you need resources, to run your business, then you have to think inward, probably 10 SMEs, they can come together and see how they can raise fund, maybe internally or wherever. But there are ways to raise fund. For instance, 5 persons can come together and say, oh, if you collect your salary, so you're going to bring 200,000. This brings, 5 persons come together and they're able to contribute 200,000. That's zero interest rate. So at the end of the month, somebody gets 1 million, and at the end of another month, another person gets 1 million, because it's quite expensive to borrow. In a sense, it also makes that whatever resource that you have, whatever income you have, you don't spend it anyhow. So in essence, you must be mindful of your expenses, because we are not in a good time. We are in good time when the central bank pursues expansionary monetary policy. Money flows to the economy. But when money doesn't flow to the economy, it means that the government the central bank wants to contract the economy, as individuals, as firms. So it makes it's not the best time to increase salaries. And if you must increase salaries, you must ensure that the workers do their job. Of course, quite important that you pay what we call efficiency wage to get the best out of your worker. But you must ensure that, they do not waste time. Okay.
But also another issue here worth
Yes.
pointing out, as I have already mentioned,
Yeah.
are the people who are essentially dependent on said jobs, in the small and medium scale enterprises for their means of livelihood. The ones who struggle already, the businesses that is, who struggle already to keep the lights on, will struggle even further to be able to accommodate everyone in their payroll. And that means some people will be losing their jobs. What does this mean again for the economy? Put that also together with the average market woman, or the average market, the average trader who just wants to get by, on a day-to-day basis. In terms of Naira and Kobo, this is definitely going to, it's not a good look for them. So I have, been made to understand. But what's your take on all of this as we round up very quickly?
Okay, thank you.
Because first of all, pardon me, please. First of all, we know, and I said, it has already been established that this is what the CBN wants to do, which is more or less laudable. Them wanting to drive down inflation. That's established adequately. However, the manner in which these actions are taken is what people are asking. Why and what exactly it would mean for us. As I said again, it's a piecemeal approach, but over time, it doesn't look like it's been very effective. It doesn't look like it's helped, quote unquote, helped the average low income or middle income earner. Well, let's take out middle income. The average low income earner, because there's multi-dimensional poverty in the country at this point in time. So putting it all together, again, I reiterate, it's a source of concern in the moment. Let's wrap up with that.
Yeah, it is a discretionary monetary policy. We also have what's called automatic stabilizers when it comes to the fiscal sector. For instance, when you give out, kind of bursaries or kind of grants and all of that, those are automatic stabilizers in the economy. Now, but what it means is that the hard time doesn't last all the time. People must know that. For instance, at a time when there was the global recession, and they asked Kings then, what happens in the long run? And he say, in the long run, we are all dead. In essence, the hard time doesn't last all through. So that's going to be a point that is going to be a turning point. So now, at a hard time, what it means is that everybody must look inward.
Okay. Again, lastly, very quickly,
Yeah.
Dr. Rather, do you see, and again, I ask this because there are also fears regarding it. Do you see inflation rising, core inflation? Because we saw that while headline inflation and food inflation fell, we saw core inflation rising just very marginally. So do you see inflation rising across the board, whether it's core inflation or food inflation that already dropped? Do you see those rising too, in the near future, say over the next 6 to 12 months or thereabout?
Yeah, like I said, in spite of the policies of the central bank, if the structural, changes that are needed to ensure that Nigeria economy continues to grow and is sustainable, if they are not there, you know, the inflation rate can still increase at any point in time.
Okay. Thank you very much, Doctor, for joining us this morning. We've been talking about the CBN's Monetary Policy Committee meeting that led to the increment of the current rate hike, interest rate, beg your pardon, from 26.25 to 27.25%, talking about the implications for the economy. Dr. David Martin Oke, an associate professor of economics at the prestigious University of Lagos, has joined us this morning. He's also a sustainable development economist and a macro economist. Doctor, many thanks again for joining us.
Thank you very much.
Yes, that's Markets Insights. Today we are going to take a very quick look at what happens or what it does look like in the currency markets from Monday till this very day, Friday that is. On Monday, at the official market, we saw the Naira trading to the US dollars to the US dollar at 1,628 Naira. On Tuesday, we saw more fluctuation with the trade going at 1,676 Naira, and even more fluctuations on Wednesday, seeing the exchange at 1,575 Naira, 1,669 Naira yesterday, Thursday that is, and today, 1,575 Naira. That's what it's looked like the entire week on the capital markets, on the official market, I beg your pardon. Elsewhere in the parallel market, it's seen, as I mentioned much earlier, an all-time high, or a 7-month high rather, of over 1,700 Naira, and it's gotten traders worried, as he were, making them wonder where we go from here. But of course, just as Dr. Oke has said, and just like many other experts have said, all of these measures, as he were, combined are more or less what the CBN is doing to see that the economy is better off in the long term. The immediate fallout mightn't exactly bode well for Nigerians, but we're hopeful, and we have our fingers crossed that in the long term we'll all be better off for it. That's Market Insight today on Souq News Television. Many thanks for watching. Do stay tuned for the news at the top of the hour, the news update that will be, and of course later on today for the major news bulletin. In between, it's great programming for your viewing pleasure. Until next week, when Market Insight comes your way again, do have a fantastic weekend. I am David Chiedu. Good afternoon.